Hello and welcome, everyone. Thank you for joining us today for this Infosys Finacle and the Global Treasurer webinar. We're very grateful that you've joined us today. Today's topic is redefining cash management, best practices for modern corporate banking. So I'm looking forward to having a great conversation today with my wonderful panel that I have here, who I will introduce to you in just a second. But first off, I am Antoinette Buerta, and I will be your moderator throughout the session today. So before I introduce everyone, there is a couple of housekeeping items I'd just like to cover off. Firstly, if you have any questions for our panel, please do send them throughout the conversation into the questions tab in the bottom right-hand side of your screen. You can send that throughout. We'll only answer them at the end of the session, though. Similarly, if you're having any technical issues, please do message us in that same tab, and one of the technical support people will get back to you and help you through that. So next we have polls today. So they will pop up onto your screen. We have 2 of them, and we ask that everyone does participate. That will pop up onto your screen. Simply select and submit your answer for those. And with that, let's introduce today's panel. So I'm going to ask each of you just to introduce yourself. Justin, if you'd like to go first, please.
Sure, thanks, Antoinette. Hi, my name's Justin Silsbury. I work for Infosys Finacle. I'm lead product manager for Cash Liquidity Management.
Brilliant. Royston, if you'd like to go next.
Thanks, Antoinette. I'm Royston DeCosta. I'm the assistant treasurer at Ferguson. I am responsible for the intercompany loans and driving our group's treasury strategy and technology. For those that don't know, Ferguson is a North American leading value-added distributor of plumbing and heating products with turnover just under $30 billion and primarily listed on the New York Stock Exchange. I think it's worth also mentioning in terms of sort of what I'm hoping to share on this session is in my experience, my 35-year experience in Treasury, I believe there's 2 parts to the services banks offer, broadly speaking. So the first part I see is mainly DCM, debt capital markets advisory strategic. And the second part is pretty much operational, including cash management, FX, money markets, and bank account management. I just want to make clear that in most of my responses, I'll be referring to the operational issues that I see with the banking industry today.
Wonderful. Thank you. Thanks so much for joining us. Last but certainly not least, Adolfo, if you'd like to introduce yourself.
Thank you, Annette. I have been in the market for 30 plus years, working for 5 large institutional banks like Citi, HSBC, RBS, Santander, and Lloyds Bank, and more recently as senior advisor for McKinsey in the payment practice.
Wonderful. So as you can all see, I am in very good company today, so I'm very excited to lead us through the conversation. As we all know, today's topic is really important for everyone within the banking sector, as well as their corporate counterparts. The banking industry is constantly changing, new technology coming in, so it's really exciting just to hear your perspectives on all of this. So I'm going to start the conversation. Justin, I'd love to hear from you first. So my question to you is, could you provide us with just a high-level overview of what the latest trends are that you're kind of seeing in corporate banking?
Sure, and I think there's quite a lot, so I'll try and just probably pull out some of the the major ones that we're seeing. I think that one of the ones that we've seen probably for the last few years actually, and still ongoing, is the impact of the pandemic has accelerated most banks' their digital sort of transformational journey, particularly around the fact that almost immediately the corporates had to manage working from home, things like that. So the remote and the mobile banking services has been kind of a high priority for banks, and particularly working as a financial service product provider. That's a lot of opportunities that we discuss with banks is around the corporate channel, which kind of leads me into the next thing is the whole kind of channel experience. Now, for a long time, the large corporates have obviously had a good relationship with the banks and mainly run their systems, TMS, ERPs, but it's been kind of the small to medium sized businesses that we've seen banks looking to support, provide them with more of a retail like experience. I guess another thing, probably it's been around a while, but open banking continues to gain traction, particularly around the banking as a service, embedded finance space. Where I think most banks are on some kind of a journey there, have a strategy there, where they're exposing their APIs to provide their products and services through brands and marketplaces. Slightly different to that area is probably the ESG focus, the environmental, social, and governance. Most banks have some kind of strategy around that, where they're particularly in the lending and investment space, where they're looking at sustainability and how they can help in that space with still providing lending and investments, as I said, but focusing more on the sustainability side. And no surprise, around the whole risk management, compliance, trying to keep on top of the different regulatory requirements that's coming out. So not necessarily a new thing, but something that's high on the priority list for banks. So yeah, that's kind of my summary there.
Great. Yeah, we certainly at Global Treasurer, we quite frequently hear about the regulatory changes, and open banking has been a trend that we've been speaking about for several years now. So that's great to see. Royston, are there any other trends that you're sort of noticing from the corporate side coming into corporate banking?
Not much different from what Justin said, but I do want to add some comments in terms of some of the points he mentioned. So, well, actually, one thing I would add is, from my perspective, it's what banks are pushing forward, right? Or putting forward. Virtual bank accounts seems to be a hot topic for banks. I'm not, particularly, either way on those. APIs, as Justin mentioned, I think the area of card payment services is a big area, obviously, and it kind of, does vary, but that also seems to be very, again, a hot topic. But what's interesting to me more recently is cash forecasting has come on the radar for banks, which they've never done before. And it kind of makes sense to a degree that they have a lot of this data already in their systems. But that's where, one other area I would mention, and that's interesting, Justin mentioned ESG. So with the ESG, at a conference I went to recently, I was surprised to see or hear some of the banks coming off boil on ESG deposits, not so hot on those anymore for some reason. And then the other thing I was also going to mention is digital currency. That does vary from bank to bank, but clearly there's a lot going on in the CBDC space. So I watch that space very carefully in the next 12 months. Perfect.
Adolfo, any other trends that you'd like to mention?
Obviously, being the third one, there is not a lot to add, but I would like to be creative here as well. We shouldn't forget about deposits and accounts. Why? Because the transaction banking business is today $1.2 trillion in revenues for all banks in the world, and 50% of that 1.2 trillion is made from net use of funds, basically deposits. So half of the business is coming from deposits. And Justin and Royston mentioned almost all the topics that all banks are working precisely to get these deposits on board. So today, the challenge of banks not only is to generate this deposit, but to keep the deposits. So one of the areas that banks are more and more trying to focus is how to be creative as keeping the deposit, growing the deposits, enhancing all the liquidity offering through technology and through processes that they have to offer to the market. So that's another angle to look at that.
Perfect. So now that we've covered the trends, we'd love to hear from the audience just really quickly. So we've got a poll that's going to jump up for you. And that poll question is going to be, what do you believe is the biggest challenge in cash and liquidity management today? So if you can go ahead and just click your answer and submit that, we are going to look at those results in just a second. And while we wait for the audience to do that, Adolfo, I'd love to hear from your perspective what you think are some of the biggest challenges in cash and liquidity management today.
Yes, in my view, I could say the biggest challenge is none of the four that has been mentioned before. I could say that the biggest challenge is our own innovation and imagination. That's the biggest challenge to sort out. Because we can work with certain regulatory framework that any country in the world will have, any industry will have. So that's a framework to work on. We can work with technologies, more advanced, less advanced, more advanced. But I think the most challenging is with all the resources, people, technology, processes, products, how I can excel in the expectations of the clients. This is the most important challenge. How I can distinguish in the market. For many years, a lot of analysts and also colleagues have said, well, this is a commodity market. A payment is a payment, a deposit is a deposit, an account is an account. But with all my respect, I fully disagree. This is a market where you can distinguish every single thing that you launch into the market with different features, different functionalities. Always, there is no two products in the world that will be the same. And this is the challenge, to be innovative and to be creative.
Perfect. So let's have a look at what the audience has said today. So let me just pull those results up for us to look at. So it looks like the audience with 40% have said forecasting accuracy is what they're experiencing right now. And to be fair, we did not put that Adolfo's option as one of the options. So that's great to see. So we've got forecasting at 40%, regulatory compliance at 23%. Tied at 23% is technological integration. And then at 14%, we have risk management. Justin, is this sort of what you had expected to see from these results?
Well, it's interesting because just picking up on Royston's point, that's obviously a big focus for banks. They're investing a lot in using that data to provide improved cash flow forecasting. I'm not sure who we have on as the audience today, but if there's a number of bank attendees, then obviously that makes a lot of sense because they feel that's where the money should be invested. I generally think that makes sense, and it kind of picks up on what Adolfo said. Regulatory and technical shouldn't really be a challenge for banks and for their customers. It's there, it's available. It's just to make sure that you have the best technical, best technology, and also you're on top of the regulation. I think risk maybe seems a bit low. I think there's a lot of operational risk out there, a lot of risk with interest rates and FX. So I thought maybe that would be a bit higher. But yeah, forecasting makes sense to me. Yeah.
Perfect. Royston, is that what you had expected to see from a corporate side?
Absolutely. I was definitely expecting forecasting to be the top one. Technological integration comes out joint second. I'd have thought that would have been second, and then regulatory compliance and risk management for sure. And I think it's worth, from my perspective, thinking, and I'm trying to second guess this, but I would imagine this is really a corporate saying, these are the pain points we are experiencing, regardless of the fact that we're talking about banks in this conversation. So I think they would appear pretty much, in any survey you give corporates. But I think the panelists are right. There are the bigger challenges as well in terms of interest rate, management and risk management around FX and the volatility that we're seeing in the world today, frankly.
Wonderful. I'm going to move on to our second question that we have here. And Adolfo, I'm going to come to you first for this one. So the question is, can you elaborate on your vision of what contemporary corporate banking should look like and the key elements that define that?
Absolutely, Annette. I like the question. And let me answer in a different way, perhaps. I can see more and more transaction banking and corporate banking like a chess game. Okay, let me elaborate on that. Each piece of the chess represents a financial service of technology. We have the king and the queen, which means the digitization. They are very important pieces in the board and represents moving online from transactions to interaction with the clients. Then we have the rooks, which is what I call the data analytics and the artificial intelligence, which is they tower over the landscape and try to move with calculated moves. Then we have the knights. The knights for me represent cybersecurity, which is a topic that not many times is being mentioned. Is there, but the knights act as guarding the game of a lot of banks. Then we have the bishops, which is perhaps the regulatory framework moving into different directions in the board. And finally, I think the audience will love and you will love that it will come the pawns, which is for me the fintech. They represent the fintech. Why? Because each piece plays a crucial role there are many in the chessboard game, by 8 per side. They play a crucial role and sometimes could define the game.
I think that's a really interesting way of putting it. I don't think I've ever had a comparison like that. So that's really, really interesting. I'm curious, Justin, what are your thoughts on that? And how would you think sort of moving forward with all of these different pieces, corporate banking will be moving forward? What do you think?
Yeah, no, absolutely. And again, very, very good sort of analogy, the way Adolfo put it together. I mean, I think it kind of picks up again from the first question. It's the trends. So the vision is, we're kind of, the trends will, is trying to, reach that vision. So again, it's around for me, probably the main one, as I picked up briefly, is around the open banking and, the collaboration with the what I call the traditional banks, the fintechs, the digital banks, they're all working together. We may have seen a couple of years ago where there was traditional banks may have seen these technology companies as a threat, but now they're working closely together. They recognise a bit, like Adolfo mentioned, it's a different way to ensure you receive or you maintain your customers' deposits, and you can win new deposits by providing these different banking as a service to different fintechs and digital banks, because a lot of the big banks don't really want the small sort of transactional business that possibly these different, for example, payment service providers are providing to their end customers. So the big banks don't really want all that traffic, but they're still maintaining those transactions through the fintech themselves. So it's a win-win situation for everyone at the moment.
Great. I'm very curious, Royston, to hear from your perspective. From a corporate side, what do you want to see from banks?
So thank you for that, Anthony. I love the analogy by Adolfo. That's quite kind of an interesting one. But look, the traditional model for most corporates that starting a relationship with a bank is usually through a facility or some sort of financing that's been arranged. And I heard a very interesting phrase used recently, which is entering an RCF facility for a bank. Gives them a ticket to the dance. It doesn't guarantee them the dance, if you like. So that's one way of looking at how sometimes relationships. But for me, it's all about the relationship. Fundamentally, it's basic 101 corporate banking relationship and how you manage that. So, certainly for Ferguson, it's always been the relationship first with all of our banking partners. And frankly, this is more about what leads to, the product and services that come afterwards. But it's a relationship, it's customer support, getting the basics right again, making sure that, we're getting the right level of support. And also in terms of some banks not making it work with their silos. It's another kind of issue, pain point that I've seen and experienced a couple of times. You want to be able to go to one area, or at least be shielded from having to be passed from pillar to post. And then thinking about the strategic part of the relationship, we want our banks to understand and support our business. In other words, show us that we matter, invest in and partner with us, and tell us what you're really good at, because that's also quite important. It's not all about what can you do for us, but tell us what you believe you're good at. And then finally, I'd say, of course, I'd mention this. I'm a great believer in, look, the fintechs have a part to play, especially with open banking and in terms of where technology is going. And I think the banks could really, and I think they are doing this, but not enough and not quickly enough, in my view. We want solutions today, not in 10 years' time. So I think partnering with fintechs is one way of expediting those solutions.
Brilliant. I do think fintechs are up and coming, and we're definitely going to see a lot more collaboration, I think, between fintechs and banks in the near future. So Justin, I'd like to go to you for the next question. So how can banks prioritize objectives integrating near-time daily banking, cash and liquidity management, and authorization services in a unified interface tailored for modern markets?
Perfect. So first of all, they need to have, all banks need to have, a strategic approach that, that sort of kind of, that picks up on different activities. So I guess one activity that, and if we just, we're thinking about this unified interface, right? So the first thing that banks want to focus on is like a customer-centric design. So what do I mean? Historically, you'd have a online corporate portal which is very siloed. You'd have your payments section. Then you've wanted to go to your investments. You'd have to switch to maybe go to another single sign-on and go there. And then if you wanted to look at your accounts, you'd have to go somewhere else. Now, what banks want to do or trying to achieve is have this, as I mentioned, this customer-centric design where you have a very intuitive, simple to navigate, all things in one place. So you'll launch onto this dashboard, and I'm talking again more for the small to the medium-sized corporates where I think that's the focus for banks. I think the large corporates won't necessarily be using the bank's portals so much. So for those size businesses, providing them with all the information, we talked about it a couple of times now. Banks have the data. They even have more data now for open banking. They can provide a lot of information to their customers on the portal. They can provide using machine learning, AI, insights and recommendations. But to achieve that, they need to obviously do a lot of comprehensive market research. They need to think about the different personas that they're looking to try and provide these solutions to. And probably most importantly, they need to get feedback from their existing customers. I think, Royston kind of touched on that with one of the most important things about a banking relationship is, having a bank, that you trust and you can work with. So that's really important is to get that actual feedback from the customer, make sure you incorporate that into the interface. I suppose, again, we talked about, the poll came in forecasting. How can you provide that more detailed forecasting information to the customer in a more of a real time, or at least near real time, basis. The customer needs to understand, have they got shortfalls? Have they got maybe surplus cash that they need to invest? So the more information, and it needs to be insightful as well. It can't just be lots of data, and the corporate needs to sort of sift through it to understand what to do with that information. They need to be told, by the way, based on our analysis of your forecast, this is something you need to look at in 3 weeks' time. So really important to be able to help them in that space. Again, we touched on it, but yeah, obviously the integration, the seamless integration, this digital banking platform, whether it's integration within the existing banks ecosystem, or integrating with partners and third parties. And I think the final piece is, obviously you can't just do the work and then you're done with it. These interfaces are constantly evolving. So the banks need to work very closely with their technology vendors, and have a dedicated resource and development team to continue to look at how to continue to improve things, and they need to continue to get this market feedback, both for just not just the look and feel and that kind of side of it, but the technology advances, regulatory changes. So there's a lot of it's an ongoing journey that banks are now going to be on for a long time.
That's really interesting, and I'm hearing all of this from a perspective that I have spoken to a lot of CFOs and treasurers in the last couple of months regarding some of these topics, and some of the things that you've mentioned were explicitly mentioned as pet peeves by some of them. So, for example, you were saying that logging into all of these various different platforms just to get information, that has come up time and time again as a pet peeve for several CFOs, saying it just feels like a waste of time. Can it not just be in one central place? So that's really interesting that you've mentioned that. Adolfo, I'm curious from your perspective, how do you think banks should prioritize these objectives?
Well, as I think Justin and also Royston, maybe so far in the conversation, we talk about 10 or 15 topics that banks should focus on, okay? From products, from technology, from processes, from cybersecurity, documentation, etc. So this is the challenge for banks. The best way I find on a practical is basically to put on a matrix, then to say, okay, what is the opportunity and what is the effort required for that opportunity? That will provide a first clear view where to concentrate the effort. That would be a step number one. Then a step number two, I would like to mention, do not entertain hobbies. Okay, do not entertain hobbies. This is a huge market, and everybody's very excited with certain pieces of technology here or there, and everybody's very proud to do a test or a proof of concept. But sometimes from the proof of concept to a real market, there is a bigger step. So think carefully before jumping into big project without knowing exactly where you are going. And then finally, this is a business that particularly this year and last year is growing at approximately 20% per year. Okay, the market 2 years ago was 1 trillion. Last year was 1.2 trillion. Now we're transitioning into the 1.4 trillion. So this is the moment. I cannot find a better moment for banks to invest in the business, because very, very rarely you will see an opportunity like this. Today is the opportunity to look at the business, invest savvy where it require attention. And today the technology allow us to even to revamp the whole system or to focus on certain pieces at a time. So that's another another thing to look at today's transaction banking world.
Great. Royston, I want to hear from you. What have you seen from various fintechs and banks that you find truly innovative in corporate banking? Is there anything that you're thinking is innovative, or
Oh yes,
you think it's
I just want to add
same?
2 comments. Sorry.
Yes, please.
I just want to add 2 comments before we go into the answer to your question. I believe the elephant in the room here in terms of what banks can prioritize objectives is the fact that the banks, a number of banks, large banks, still have legacy systems which either they are unable to update or are doing it very slowly. So I think that's hampering the speed at which they're able to adopt new technology or partner with fintechs. And then the point you mentioned about single sign-on is very interesting because obviously we've got SaaS solutions, cloud-based solutions. There's a technology that's called data cloud, people might have heard of, which I think in the future will be the way that companies and maybe even banks choose to use, because there you can have your data all on one platform. But I can understand banks will be naturally sensitive to looking at that. But to answer your question in terms of the innovation I've been seeing, so currently the banks that we partner with, obviously APIs are big. I've mentioned cash forecasting and then digital currency, although they would perhaps refer to as a payment rail rather than actual kind of digital currency. But I believe banks are working on that because clearly that's something that's going to happen in the future, or at least in the near future. But I would also say that, for us as corporates, it's not just looking at the latest technology, which obviously is important and it's exciting sometimes as well. It's also trying to make sure that our pain points and the issues that we currently have are quickly resolved or escalated. So I think Adolphe and Justin both mentioned about banks investing in technology. Absolutely, they have to continue to do that. I think that as we are as corporates. But then also, I think it's important that they showcase what they're doing in this space to their customers. Now, some banks are really good at doing that. I was at a conference yesterday where I was bowled over by the speed at which, not technology, but just technology, but the banks, or this particular bank is moving, is incredible. So it's interesting that whereas 10, 15 years ago, we'd say, okay, well, this is happening in 10 years, or the future is in 10 years. But believe it or not, and I don't wish to sound cheesy or glib, the future is today. When we look at technology, we're not looking at something that's going to happen in 5 years' time. It's happening today. A good example is ChatGPT. A year ago, ChatGPT 3 was around. Today's ChatGPT 4, and they're already looking at 5. So in terms of timing, I think any of us can afford to stand still. And that's why it's so critical that the banks, the fintechs, and we continue to partner in moving forward in these areas.
Brilliant. I do think you're completely correct in the future is today at the moment. In everything that we do, we no longer wait for things. And so taking 10 years to bring in new innovations, 5 years to bring in new innovations is no longer really acceptable. People get bored and move on very, very quickly. Needs change extremely quickly. Yeah. I'd love to now, again, just bring in a poll for our audience. So the question we have now for you is, how has the recent global economic volatility affected your approach to cash and liquidity management? So please do go ahead and just submit your vote there, and we'll take a look at those results in just a second. Royston, I would love to hear from you what you think people are going to say here.
I think it could well be all of the above, really. I depend on the company, depending on their journey. I think for us in Ferguson, frankly, I wouldn't say there was any significant change. We've got a fair bit of technology already in place. We've had pretty robust risk management policy. And in terms of controls, and we've now listed on New York Stock Exchange, we're very stringently monitored under SOX. So when you think about controls, and I'm not saying we've got all of them, but it's pretty tight. But And one last point to mention, I'm not one that believes we just sit back and say we're there. I believe very strongly in terms of in Treasury particularly, we have to constantly continue reviewing our processes.
Great. So responses are a little bit slower this time. So audience, just again, please do click and submit your answer there. Adolfo, I'd love to hear from you while we wait just for those couple of extra people to submit their votes. What are you thinking will be one of the top responses there?
I expect, I don't know what are going to be the answer, but I expect to be more on the investment side for the reasons that I mentioned before. This is a good moment of the business. 1.2 going to 1.2 trillion revenues for transaction banking is a good moment. This is a moment to reflect and to invest in the business. Fortunately, this business is considered low risk compared to other businesses in a bank. Has always had a very low what's called RWA, risk-weighted assets, meaning that the volatility, although you need to watch out the risk, in this particular business has less impact compared to some other business like lending or capital markets. So hopefully should be the effort of this volatility and represents an opportunity.
Great. So let's take a look at what the audience has said. And Justin, I'd love to hear if this is what you had expected to see. So again, the question was, how has the recent global economic volatility affected your approach to cash and liquidity management? And our audience said with 52% tightened controls and monitoring, 35% increased focus on risk management, 10% expanded investment in technology, and only 3% said no significant change. That's really interesting. So, Justin, I'd love to hear, is that what you had expected to see, or is it also different?
Yeah, and again, depending on the audience, I think there may be some corporate attendees as well as bank attendees. So, I think particularly if you think about the recent issues that we saw with Credit Suisse and SVB, for example, it's not surprising to me that even if you're a corporate, or you're a bank, some of the things you need to focus on is making sure that you have that visibility around your cash and your liquidity, making sure that you don't have exposures. So managing all that to me is, and I'm a vendor on the other side, so but I see that's probably the most important thing for both banks and corporates. But I just wanted to pick up on Adolfo's point. I do agree that now, though, is the point that you can probably reflect and look, particularly as a bank, and say that we're in this high interest rate environment. How do we maintain our customers? How do we win new business? And they've got an opportunity, particularly if they're getting record profits, for example. Let's invest that money back into our technology. Royston said there's at a conference yesterday, there are certain banks that are amazing at this, and they are seeing the future today, whereas there's other banks that aren't investing, and they're just going to continue to fall behind the best in class. So yeah, combination. I get that the priority has been around controls and managing your risk, but yeah, for banks now, they should be looking at investing that money.
Perfect. So throughout this conversation, we've talked a little bit about collaboration, so I want to start focusing on that a bit more. And Justin, I'm going to come to you first for this one. So collaboration seems to be a bit of a crucial element in modern corporate banking. What strategies have you seen as most successful in forming robust partnerships with top-tier tech providers in the banking industry? And why are these partnerships so important? Bit of a loaded question.
No, absolutely fine. And you're right. It is. I think it is crucial. I've mentioned it a couple of times. Banks need to be, working with, with these fintechs, or even with digital banks. But I think probably the most important point around having a successful partnership is having a shared vision and goals. If you're working as with a partner that you're not on the same page as to where you want to get to, it's inevitably going to fail. So having those shared visions and goals between the tech provider and the bank, having those kind of open lines of communication. A partner should be someone that you're engaging with almost on a daily basis. Just making sure that you're aligned. You constantly remain sort of aligned as to, and make sure that you're progressing together. I think probably another important point is what is the we talk about value propositions. The bank and the partner need to have a clearly defined value proposition. They need to agree. Again, similar sort of idea is we need to agree to this value proposition, and if things change, we need to make sure we're aligned to those changes. So I guess they're the main ones. Probably the most important point again is Royston, just mentioned earlier about futures today. That they need to make sure that they're constantly innovating. The banks and their partners need to be looking at the solutions, looking at the market, and make sure that they are providing the most innovative solutions that's available.
Perfect. Adolfo, do you agree with what Justin has said, or do you have some additional thoughts on that?
I would like to go one step further. Justin started the topic mentioning that it is crucial, the importance. I would like to go one step further, saying that the success of modern transaction banking will be, in most of the time, based on how they manage the partnerships and the relations. That would be a critical component, because we have witnessed and repeatedly Royston and Justin mentioned the pandemic period, the digitization period. We have seen that the banks need to adapt to modern times, need to adapt to new regulations, need to adapt to cryptocurrencies, need to adapt to new forms of cross-border transfers. Royston mentioned virtual accounts. So banks realize once and for all that cannot do them alone. Okay, so they need to constantly, mainly for time to market. So what is important for banks, number one, to understand the full spectrum of partnership that they could do, whether it is an ecosystem to distribute their product, whether there is a technology to build their offering, where has to be some advisory people for regulatory and operational reasons. So they need to understand the whole spectrum. And many times I find it quite confusing and tough just to keep pace with the number of companies that are appearing almost every month, every quarter, in order to provide a specific niche solution that you're required. So I think the challenge is, number one, to orchestrate all this effort, understand who is who in the market, and most importantly, how you can select the right party for each of the needs that you have.
Great. Royston, what have your observations been regarding these types of partnerships?
So I was going to approach it slightly differently, actually, Antonetta, because I thought it's worth maybe just reiterating the fact that since the economic crisis of 2008, Treasury within most corporates has increasingly been promoted, and certainly since the pandemic, to have a permanent seat at the table. I think that's very important to recognize in terms of within a corporate that they are considered as a major decision maker. And certainly within Ferguson, Treasury were front and center stage the day we went into lockdown. So from a collaboration perspective, certainly internally, that gave us a lot more access to internal stakeholders, and also an understanding and insight into how they operate, particularly, as I say, in terms of the challenge of the pandemic, had to offer. And that therefore meant when we dealt with our banking partners, we're able to give them a lot more insight into some of the challenges that we were facing, and frankly, our customers were facing. So that's important. It's interesting to say with partnerships. Now, 4 years ago, we have a fintech that we engaged with, and I approached one of the banks with a solution that they wanted to promote, which actually was using blockchain. I wouldn't suggest it was particularly advanced, although for that time it may have been. The bank wasn't particularly interested at the time, almost to suggest that maybe this was a fad. This was going to be, clearly we all know blockchain is very big today and it's being used by a number of fintech. I think that's part of the challenge that banks are facing, some banks are facing. I think that same bank, by the way, is now moved on significantly and actually happened to be the one I attended the conference at yesterday. My point being that, as Adolfo, I think, alluded to, banks are rightly so very cautious and, sort of not necessarily go into a relationship with the fintech very quickly for good reason. But I don't think they can afford to necessarily sit back and not recognize that there are solutions out there that can really make a change and a difference to the relationships they have with their customers like ourselves. And obviously, in terms of areas like cyber fraud and, where banks can continue to partner with us as they do currently to educate and help train where possible. So there are other areas that perhaps not core banking services, but certainly add value for us as a corporate. But I definitely want to see more, in my view, fintechs partnering with banks or vice versa, to try and deliver the solutions that we need today rather than 5 or 10 years' time.
Brilliant. So I'd love to encourage our audience at this point, again, just to send us some additional questions. And I want to, so we have 1 or 2 questions already from the audience, but I do want to just finish off our current conversation before I go to that. So Royston, we've just had a bit of conversation around those partnerships. I'm curious what other types of collaborations and partnerships you think are key for modern corporate banking. Is it just fintechs that are necessary, or are there other spaces too?
Actually, this comes back to one of my original comments around the relationship. I think, and I've done this with some success in the past, banks need to, and this is an expression my treasurer came up with, which is exercise something called thought capital, right? In other words, try and put some understanding into how our business operates. And it's not just at a parent level, typically, which is where we interact with the bank at. It's also at the subsidiary level. And occasionally I've, say in the past, I've had a situation where we've organized a workshop with our banking partner to go through a particular requirement at our subsidiary might have had, maybe around leasing or even online payments or something along those lines. It's great both for the bank and for us, because why? It gets you to that level of, dare I say, detail, but more importantly, it gives the bank an understanding of what's actually at stake here. So that sort of partnership and collaboration is quite important, I think. And we shouldn't shy away, either as a corporate or as the bank, to investing a bit of time in that, because I think that can quite often leads to a lot more value than some of the kind of more transactional banking, process or transactions we might have. But they're important, or just as important. But also, I'd say it's important now, especially more than ever. Banks should really, with their customers, present their roadmap for what they're looking to develop, so that we can be better informed as to what they're looking at and what's likely to come up, tomorrow or in 12 months' time. I know some of this can be quite confidential, so I totally understand, the old kind of, sort of intel, protection of intel, but there are certain things they can allude to, and certainly, sort of suggest that they're working on it and kind of help us to understand better as to where they're heading, rather than keep us in this kind of limbo state where we don't really know, are they going to resolve the KYC issue, so on and so forth.
Great. Justin, do you have any thoughts on further collaborations or comments towards what Royston has just mentioned?
To be honest, I think Royston's covered all everything that I would have also covered. No, that's fine. Absolutely fine.
That's brilliant. Okay. Adolfo, maybe do you have anything additional to add there, or can we move on to the audience questions?
Yes, I think we can move to the audience, but just to complement what Royston and Justin mentioned, I have seen collaboration most recently in cross-border transactions, so companies that are expanding the number of currencies, in the area of reconciliation, which is a headache for most of the corporates in this world, anything related with reconciliation of accounts, forecasting. Most recently, I have seen a lot of success cases going into platforms of trade finance for invoice discounting. So if we point to every single pillar of transaction bank, which is payments, receivables, liquidity, channels, commercial cards, we have seen collaborations almost everywhere in every single box.
Perfect. So let's go over to the audience question, and we have two audience questions lined up for you now. So again, audience, if you have anything else to ask, please do submit those questions now. So the first one we have here, I will be honest, I'm not 100% sure what they're asking, but I will let you know what I assume is being asked. So the first question is regarding discussing trending themes like APIs. So what's the panel's view on the real-time versus just-in-time treasury dichotomy? And that's actually being asked by a banker. So does anyone have an answer to that, or do you want to hear what I think they're busy asking?
I can take a stab at it.
Yes.
And then obviously, other people can jump in. So obviously we always talk about real-time from a payments perspective, so making real-time payments. When we talk about just in time, I think more around liquidity management. So having that money available at the right time in the right place, 24/7. That's to me more the just in time. So I'll give an example. If you're needing to make a payment and you don't have available money on an account, we're seeing things like just-in-time sweeps, where you can sweep money from another account that has surplus cash into that account to ensure it still makes that payment obligation. Real time is when you actually hit the trigger, the money goes and it gets credited on to the other person's account in real time. So I think there is a slightly different interpretation of the two things, but I'd be certainly happy for Adolfo or Royston to also provide their inputs.
I can jump in a bit here. I mean, I do think APIs have a place and have something to offer. I personally don't feel I want to sign up to multiple APIs. So if an API aggregator out there, perhaps that's one way I'd look at. But certainly in terms of real time versus just in time, do you know what? I mean, definitely think real time adds some value for those corporates that need to know that on a real time basis. In terms of just in time, I kind of look further ahead. So my view is that ultimately, once we get to a point where we are using digital currency, it won't matter, in a sense, whether it's real time or just in time, because you will have effectively a 24/7 value dating of payments and transfers. But I know that's kind of muddying the waters a bit in answering the question. But so for now, I think, the other issue I'll say in terms of these points, and I noticed that bank has posed it, as a corporate, frankly, I would want that service, whatever service it is, real time, just time, without having to pay for it, frankly.
Great. Adolfo, do you have anything to add to that, or do you want to move on to the next question?
No, I think let's move on to the next question, because I don't think we have a lot of time.
Yeah. All right. So the next question here, and Adolfo, you've indicated that you're happy to take this first. So what do you think about the latest trend of creating new transaction banking businesses in the US by various investment banks like Goldman, RBC, UBS, etc., based on cloud? And how will it change the transaction banking landscape?
Absolutely. Fantastic. Yes, we have seen a lot of activity in the US recently, as this question rightly pointed out. First of all, the US represents approximately, give or take, between 25 and 28% of the GDP in the world. So a bank that is serious about transaction banking, they need to have a solid offering in the US. So that's as a starting point. Second, now, the key question, I think the underlying question here, how Goldman, RBC, UBS in these examples in the questions could enter into this market that already have very big players like JP Morgan, Bank of America, Wells Fargo, just to name a few very known players in the market, right? So, and the answer is, going back to the first point, is with creativity, trying to go with the flexible approach in terms of technology, flexible approach in terms of services. Royston mentioned a few times listening to the clients, having solution for industries. That is an area that not many banks have focused recently, and is an area of opportunity. Embed more APIs into the web portals of clients or sites of clients in order to bring the products to the client closely. So definitely, and more recently, FedNow is the new development in the US, and some others to follow, shows that the US market, that has been behind for a few years compared to the European and Asian market in terms of digital capabilities, now is bringing new elements to the market, and this is a result of the attractiveness that the US is bringing again.
Perfect. Justin, Royston, do either of you have any additional thoughts to that? We have about 2 minutes left. So
yeah, I'll quickly just spend 30 seconds then. I mean, I don't think cloud necessarily is relevant. I think all banks have got some kind of cloud strategy anyway, so that probably isn't important here. But look, Goldman's have been very vocal about entering the transaction banking space, and they've been very clear that they are really focusing on the banking as a service. So they do have corporate customers, but really their focus is providing their services, products and services to other fintechs. And we you type in Goldman and you can see lots of articles about that. So and I believe that's the same sort of space that RBC is looking at. I think what's different with Goldman and RBC, obviously RBC is an existing, traditional bank, where Goldman's is obviously, historically the investment bank. How it's going to change the transaction banking landscape, but for me, Adolfo talked about it earlier. It's a 1.2 trillion, revenue and growing. I think there's room for some other banks to enter this space, and they're not going to take away the lion's share from the Citis and the JP Morgans and that, but there's opportunity and for these banks to enter it and make a decent revenue from it.
I just wanted to, if I could quickly and add, Antoinette. So as a corporate, I am so pleased that people banks like Goldman and RBC or UBS are doing this. Simple reason, they raise the bar. And if it brings other banks to raise their level that we can benefit from, great. I know we haven't got time, but I'll mention very quickly. It is shocking, some of the examples I could give you today with some of our banking well, not many, but one or two, that are large tier banks that cannot resolve simple technological issues with their payment with their platform. It's shocking.
Well, I'd like to end this by saying thank you to all of you. I think we've had a really interesting conversation, and I think that this last question could actually have gone into an entirely different webinar to really round out the conversation. But I just want to say thank you to our audience. Thank you for collaborating with the polls. We loved seeing your answers there. And then to Justin, Royston, and Adolfo, thank you so much for participating as our panel today. We hope to see you all in a future webinar. Goodbye.
Thank you.
Thank you.